everyone. Welcome to this week's weekly market view for Monday, the 15th of April 2024 to Friday, the 19th of April 2024. My name is Vishal. Let's get started. All right, let's start with the monthly chart of the Nifty. And as we can clearly see on the monthly chart of the Nifty, there is a slight bearishness coming in, of course, because of whatever has happened on the weekend. Very sad and unfortunate, but that reflects on the market. We are seeing this red candle, nothing much to conclude, but what is interesting is that we have this flow gap now on the weekly chart. And there is a possibility now that the markets will try to fill this gap and then reverse or then continue its move to the downside. And that could be a corrective move, nothing much to worry as such. Now, if that does happen and if there is some pressure that comes into the market, so where do we expect the markets to go all the way to, right? So if you look at the daily chart, this is the key level on the daily chart, which is close to around 21,980 to 21,720, again coinciding with the round number here, 22,000. And right now we are seeing this gap down. So we might see one more spurt of a move to the upside, and then markets might come down, or there might be a consolidation, maybe like a drop base and then another drop. So we'll have to just wait and watch. Doesn't seem that great right now. And from here on, the markets could correct a little bit further down. But keep a close watch on 22,000 odd level. And to the upside, we need a break about 22,772. Let's now move on to the Bank Nifty. And the Bank Nifty also making all-time highs now is seeing a little bit of pressure at the top. Usually happens generally when the markets do print the all-time high. And that's where that profit booking comes in. If you look at the weekly chart, on the weekly chart also we have this gap level of supply created. Again, prices might continue to move to the downside, or then it might just consolidate here before the move. On the weekly chart, however, we do see a weekly level of demand, which is nearby to current market price. That's this area over here. And within that area, we also see a level of daily demand, right? So this is more or less very, very similar to what we are seeing on the Nifty. Maybe we can just fine tune this a little bit if we wish to. So maybe I'll just get this over here. Redraw this. Right from here up to here. So again, 46,819, 45,841. Again, if we closely watch the round number of 47,000 is going to be in play. Markets are close to around 1,000 points away, but the way the markets move when these news come out, with respect to war, we got to be a little careful. And there is a tendency of a lot of retail traders and investors, trading on smaller time frames. So whenever there is news or, whenever there is these big unexpected gaps that take place, it's always a good habit to look at the higher time frames and look at what our monthly, weekly, and daily charts are telling us before taking the intraday set. All right, let's move on to the next index. We are going to be looking at the Nifty Financial Services, which is also called as the FinNifty Index. And let's quickly have a look at Nifty Financial Services on the monthly chart. Again, very similar selling pressure that we are seeing on the Bank Nifty. Again, this gap has actually occurred in most of the indices today. So it will be interesting to see whether the gap continues to fall further. On FinNifty also, we have this drop-based rally, fresh weekly level of demand. So we'll have to go into the daily chart. And pretty much more or less, if you look at the FinNifty also, more or less the levels are pretty much the same. So again, if you look at the higher time frame perspective, 21,466 to 21,773 to the upside, and 20,800 to 20,361 to the downside. So these are going to be our critical levels to watch out for this week. This week, we are going to be having a holiday on the 17th. I believe it's Ram Navami, so there is going to be a market holiday. So it's going to be a slight truncated week. And those who are holding their positions because of whatever is happening in the market, just be a little careful and just make sure that your positions are hedged, or at least you are keeping a stop loss. All right, let's move on to the next index, Nifty Mid Cap. So we will go ahead and select Nifty Mid Select here. And let's start off with the monthly chart. So let's remove all the tools. So looking at the mid cap, the monthly candle still looks okay. If you look at the weekly chart, we are reacting from this area here. And pretty much now we also have another level of supply here. So it'll be interesting to see how the markets are shaping up, because mid cap is probably telling us that the markets may tend to go a little bit further down. All right. But we just got to be careful. If you look at the daily chart, we have this nice pro gap over here after prices came into this level of supply. And now the closest level of demand, the first level of demand that we see on the mid cap is this rally-based rally. So again, very similar situation. Demand is a little far away from current market price. Supply is close by 10,935, 11,035 on the supply side, and 10,568 to 10,467 on the demand side. Yeah, so we are just analyzing the higher time frame, since it's a situation where markets are gapping up or gapping down significantly. So we are relying more on the higher time frames. Let's move on to the next index, which is going to be our USD INR currency pair. So let's select USD INR here. And let's start off with the monthly chart on the USD INR. So if you look at the monthly chart, prices are pushing to the upside. After making the all-time high, they were a little bit of a corrective move. Now we do have this weekly level of demand intact, and it'll be interesting to see whether prices come all the way down to retest this odd level. But right now prices are consolidating, and there is a possibility now that just like how we have created a gap down on the Nifty, we have also created a gap up on the USD INR. So there is a possibility that the USD INR might tend to come down to fill its gap before continuing its move to the upside. We are going to be seeing this as a potential resistance point, 83.72 on the USD INR. So keep a close watch on the USD INR. So the USD INR gives us a great clue on where the Nifty is likely to get. All right, now let's move on to our heavyweights. So we are going to be having first a look at Reliance. Let us see what Reliance is telling us, because that is more or less going to give us a picture on what the Nifty is more likely to do in the coming days. But let's look at Reliance now. Let's start off with the monthly chart first. So if you look at the monthly chart, Reliance is pretty strong. Monthly demand zone is very, very far away from current market price. The closest level of weekly demand is situated here, and we keep on plotting this every week, actually, 2787 to 2641. And if you go on to the daily chart, we are seeing this level of demand. Okay, so today also, in spite of the Nifty being weak or opening gap down, Reliance has opened straight into this level of demand and has given us a bounce. So in case if Reliance holds this level and continues to move up, then we might see Reliance again coming closer to this resistance level of 3,000 odd levels. And from there on, we will have to see how the market shapes up from here. Just going to take that out. All right, let's move on to the next heavyweight, which is HDFC Bank. And HDFC Bank also is coming out of this monthly level of demand. It consolidated nicely here before giving us a nice break. Right now, what we are seeing is that the prices are reacting from this 30-minute level of supply. Not a very, very big concern, but yet this could be some kind of a profit booking coming in. There is this level of demand here, so it'll be interesting to see if prices come and pull back into this level of demand and then continue to move up, following all the indices. And if you look at the daily level of demand, the daily level of demand is sitting right here along with this complete gap area here, 1448 to 1421. This is going to be a new gap demand zone on HDFC Bank. And yeah, we could see markets rallying from here on as well. All right, now let's look at the Infosys chart, and I'm going to be sharing with you a key level on Infosys that's going to be more or less on the daily time frame. So the area is from 1410 to 1390. This is the area from, so there's a small gap here, and then the prices have taken off from this area. So I do believe that there is a chance that Infosys, if it does significantly correct, it might come towards this level and then give us a bounce. So just in case if Infosys does come all the way down, then obviously the opposing level is going to be 1544, 1576. But in case if Infosys does not give us a bounce from here, and let's say it does not give us a bounce all the way from this level, and let's say it consolidates and then moves up even before coming down to this level first, then 1544 to 1576 will be an area of supply from where the prices can even continue its trend to the downside. So there are two scenarios here on Infosys. Let's keep a close watch this week on this stock. I hope you all enjoyed the analysis for this week. And if you do like our channel, hit the subscription button and become a part of our channel. And if you do like these sessions, do post your valuable comments in the comment section. Take care, everyone. Have a lovely trading week. See you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.